Welcome to this week's Simple Market Update. My name is Jason Hamilton and I'm the founder of Keep It Simple Financial Planning. And in this video, we're going to discuss the upcoming presidential election and the candidates' economic platforms. So this election is historic because the economic policy proposals of both candidates are still being unveiled, despite the election being only 2.5 months away. Still, it's possible to not only draw similarities and differences between the two candidates, but it's important to review what history tells us about the impact of each political party on the economy and the markets. It's also no secret that politics have become much more polarized in recent years, and many Americans feel very strongly about their candidates. However, while elections are important as voters, taxpayers, and citizens, it's important to vote at the ballot box and not with our portfolios. So over the next few minutes, we're going to explore these topics and show why investors should not overreact to any election outcome or policy proposal. Okay, first, this chart shows that the economy has grown steadily since World War II across both Democrats, which are shown in blue, and Republicans, which are shown in red. Recessions are illustrated by the shaded blue lines. So while this may not seem intuitive to some investors, and I do know a lot of people get stressed out around election time, there are many more significant factors that have an impact on business cycles beyond which party is in the White House. These factors, such as globalization and the information technology revolution, took place over decades and would have occurred regardless of who was in the White House. Over time, it's these broad business cycle trends that drive investment returns. So, while economic policies can impact factors such as taxes and industry regulations, investors should keep in mind that they are not the only drivers of market performance. There's other underlying factors as well. All right, next here. Despite easing inflation and a strong economy by many metrics, consumer confidence remains low. Consumers have been through a lot over the past few years, and there has been a significant rise in consumer debt. And the reality is, I think we're all feeling it. Groceries are up, the cost of gas is up. So even though the economy is strong overall, incomes are technically up, I think the average person is still definitely feeling the inflation over the last few years. And remember, inflation doesn't mean, or I should say slowing inflation doesn't mean things are going down in price. It just means it's slowing at a lower rate, okay? So as you can see from this chart, total non-mortgage consumer debt has more than doubled over the past 2 decades. Student and auto loan balances in particular have surged recently, increasing at their highest rate since 2003. Both presidential candidates have centered their economic platforms on consumer issues for this reason. Despite their differences in many areas, especially when it comes to social policy, their economic proposals share many broad similarities. Both candidates have focused on the cost of living, including grocery prices, prescription medication costs, and housing expenses. These will likely continue to be the key talking points through the rest of the election cycle. Finally, this chart shows the highest marginal individual and corporate federal tax rates over the past century, with select major changes to the tax rates label. It shows that taxes are actually fairly low relative to historic levels, which I believe they are. Some expect taxes to rise in the future, which I think they will, given the growing size of the budget deficit. As expected, there are notable distinctions in crucial areas such as taxation and policy approaches between the candidates. However, they both agree on raising the child tax credit and no taxes on tips. The reality is that despite the perceived differences between the two parties, many policies often stay in place during the transitions of power, and the changes that do occur tend to be incremental. So as the election heats up, investors should express their preferences at the ballot box and not through their portfolios. We hope you found these insights helpful, and if you would like to discuss in more detail, please feel free to reach out. You can find us at Keep It Simple Financial or schedule a call directly at keepitsimplefinancial.com/talk, and we look forward to speaking with you. Have a great day.